All right, we are live. Welcome in, everybody. How we doing tonight? Sunday conversation. I'm your host, Bob. Welcome in, everybody. Appreciate you being here. So by the title of the live stream tonight, you guys could see what we're going to be talking about. We're going to be talking about the accounting fundamentals in your business and how you guys could get off on the right foot with these accounting fundamentals to teach you guys how to get your business going. I'm just checking the mic here, make sure we're all good to go before we dive into the presentation. All right. It's going to be pretty much an overview. I do have a Word doc that I kind of wrote up that I wrote some notes in that we could take a look at together. That'll help me stay on track, but also help you guys have the details behind what I'm reading, so you guys could actually see what some of the words are and some of the things I'm talking about or doing. And then we'll write out examples as well as I'm going through in there. So what is accounting if people don't know and exactly how this integrates into your business? I hope you have an understanding of what is actually going on in accounting if you got this far into the video, right? If you're here to watch about accounting in your business, you obviously have some sort of business, you have some sort of accounting experience, something that maybe you work with in your business already, and that's what we're here to do. We're here to optimize you, we're here to educate you and get you guys over the hump in terms of what your business is doing right now, because maybe you have some expertise, maybe you're making some money, you want to find ways to optimize your business, you want to find ways to make more money. That's what we're here to do, and that's what I do in my free 15-minute calls with clients. So you guys could check that out in the link in the description. We will go through your business just like we're going through the slide deck presentation step by step, and we'll get you guys in the right direction in terms of what you could do to your expenses, what you could do to your revenue streams, and you guys can make more money, you guys could cut expenses. That's the goal. So book an audit with me, 15 minutes for free. The link is in my bio for that, so make sure to check that out. So what we're going to be talking about, and let me open up the Word deck and we'll get right into it. So we're going to be talking about the intro into accounting and the stock market connection. So we're going to take a look at just fundamentals of accounting, and the language of business is the key terminology that is going to set us off in section 1. We're going to be talking about the language of business and what it means to read some accounting terms. So let me set this up correctly and we'll get into it. All right. So like I said, the intro to accounting and stock market connection. So section 1, what is accounting? The language of business. And it's a great term to call it. So the title, understanding the numbers and introduction to accounting, brief intro to me of what I do. And so I've been working in accounting for 6 years, and what I have learned in accounting is there's a lot of different terminology you have to learn, and there's so many different ways that things flow into a business. Some of these mega corporations and some of these corporations that have so many moving parts and so many bills to pay and so much money coming in, you need some sort of organization system, and that is what the language of business is, accounting. It's a way to organize the business and see where the money is and have support for all of the things that you're doing in terms of expenses and in terms of the revenue you're bringing in, the loans you have out, and the taxes you pay. This is a way to encompass all of that into one, and that is accounting. So this is how businesses have to register with the SEC. This is the financial statements that they have to provide for the quarter and for the year, and this is what real businesses have to do day in and day out. So if you actually want to build a business for yourself, a long outstanding business that you could sell for millions of dollars and close out of, you need to have good accounting and good financial statements, because otherwise, sorry, the dog is yapping back there. Jeez. Otherwise, you have to, you're never going to take care of this stuff, because if you can't take care of your finances and the numbers that you're working with, you're never going to be able to sell your business. You're never going to be able to have an exit strategy because you don't know what it's worth. You don't know what you owe on it. You don't know how much cash you have in multiple bank accounts. So if you have a clear language and script of what your business looks like, that's what financial statements are, you will be in much better shape when you want to get a loan from a bank or you want to exit your company for millions of dollars in the future. You have to have clear finances across the board. So what is accounting in a simple term? So the process of recording, classifying, summarizing, and interpreting financial transactions. So like I said, when you have bills to pay, when you have money coming in, you have to organize those transactions in terms of vendors for expenses, paying out vendors, and paying out loans and interest and things like that. You have to have an organization system, and that's the chart of accounts for most accounting companies. They label things in their chart of accounts. So each business transaction has a sub-account number that they go to, and then from there it can be organized further. So why this is important is it helps track financial health, make informed decisions, and meet legal requirements. That is a finance thing overall, is making informed decisions. You want to make sure you have up-to-date data, and you want to make sure that you can make decisions with a number behind it. That's the whole point of finance, right? You want to make sure that these decisions you're making are having positive benefit for the company. You want to make sure you make big decisions. Every big decision a company makes or a CEO makes is going to have an impact the way the business works, whether that's from a debit side, whether that's from a credit side, whether that's from a debt cash perspective. Statement of cash flows is another thing that we could talk about in this presentation as well. Okay, so that's the definition of accounting. So what is we called it the language of business. So what is the accounting equation? This is the foundation on which every financial statement balance sheet is based off of. So it's assets equals liabilities plus equity. So assets are going to be things that the company owns, the things that really make the company money. So it could be real estate. They own buildings. They own products. They have inventory would fall under some of your assets. Maybe it's trucks. Maybe it's, it could be anything. Cash. Those kind of things that the company owns. Those are the assets to the companies. The liabilities are what the company owes. So maybe they took out some debt to buy that real estate. That would be a liability on their books. Maybe they have to pay salaries to employees and contractors and 401ks. Those are going to be liabilities from a payroll side. Maybe they have other things they have to purchase, like trucks and things. Those are also on loans. That's also liabilities to the company that they owe out. Equity, at a simplest form, you could think of it, the owner's ownership stake is the difference between the assets and the liabilities. So that equity is going to be what the owner owns in the business and what kind of money they put into the equation. And maybe it's their skills. Some people have equity, but they just bring their skills to the table. But some people have equity and it's attached to a dollar value. So maybe somebody wanted to make an investment in your company of $20,000, and that would fall into the equity side of the business because they're giving the company money. Now they have an ownership percentage of the company, right? So now they take on some of the assets. They own some of those assets, but now they own some of the liabilities as well, and that's why it falls into this equation, because they all tie into each other. The equity in the company, everybody wants to be worth more equity in the company. So how do you create more equity in the company? Well, your assets equal your liabilities minus your equity, plus your equity, sorry. So if you have low liabilities and you have high assets, that means your equity is worth more in the company, all right? So that is the accounting equation. All right, and there's some more explanations down here. What the company owns: cash, buildings, equipment. What the company owes: liabilities, loans, mortgages. And then here, equity, the owner's stake in the company, like I was just saying, owner's investment. Retained earnings is another one. So if the company makes lots of money each month, they might have a paycheck that goes right to the owner's equity. So core accounting concepts. Recap: assets, liabilities, equities. We already talked about those. I'm not going to talk them again. Introduce earnings, earned income. We're going to talk about that now here. So let's go down to section 3 here. The financial statements. This is huge. This is what everybody in finance works for. This is what everybody in accounting works for. And this is what everybody on Wall Street is reading and trying to get a grasp on for the world stage for stocks and equities, right? This is what people read. This is how they make their informed decisions on what stocks to buy. There's people out there that, just look at the numbers, buy and sell, but this is what the team has to do internally to make that even possible for people to buy and sell it. All right. So you have to have clean financial statements as approved by the SEC to get on the NASDAQ, to get on the New York Stock Exchange. So you have to make sure you meet the standards of financial statements. So what are the financial statements? Financial statements are reports that summarize a company's financial performance and position. They are used by internal management, investors, and lenders. Like I said before, if you want to go to a bank and get more money out for your business, if you have a clean financial statement of what you're going to do with that money, they're way more likely to give you the money because you have a plan and you can show proof of funds with your financial statements. All right. Any questions as we're going through this, guys? Make sure to drop them in the chat. Happy to answer any questions as we get into this stuff. It makes it flow a little bit easier for me as well. If you guys have questions on what exactly you do know, what maybe you don't know, we could dive in a little bit quicker or a little bit deeper. So please let me know. Okay, so the big three of financial statements: the income statement, the balance sheet, and the statement of cash flows. What exactly are they? What do they mean? And how do they affect the business? So the income statement: what were the results of the company? So it shows your revenues, your expenses, and your profit and loss over a certain period of time. Usually businesses go by the quarter, or for some financial statement purposes, they go by the year. So they'll go year over year, and you could see your numbers this year as compared to the same time last year. Most companies do a January to December normal calendar. Some do off like March to March. I know some companies do. That's just for tax purposes. March is a little closer to the tax deadline, so they're able to push it out sometimes. Okay, so that's the income statement. And an important thing about the income statement is that it's over a certain period of time. The balance sheet of what we're going to talk about now is a snapshot in time. So what's the position? A snapshot in time shows your assets, your liabilities, and equity at the same time. So what does the company own versus what does the company owe? So a balance sheet is constantly updated. It's usually up until that very second that you're looking at it, right? Because every transaction is going to affect the balance sheet numbers. The income statement, you can look at it over a certain period of time because it's accruing, and it's just like you're accruing expenses over the year, you're bringing in money. So it doesn't make sense to have a stop point for that, because you want to wait until the end of the year, then you could count it all up how much you made over the year. The balance sheet, it's constantly going, and they also go at the end of the year as well. So you want to make sure they're up to date, of course, but it's not as important to see it on the Q1, Q2, or Q3 because you already know what it would be. The statement of cash flows is where did the money go? So it's, like I said, cash is one of the most important things to keep track of in a business. And there's 3 different ways that we could break it down, what kind of activities you're doing with your money inside of a business. So the statement of cash flows tracks the movement of cash in and out of your business. So there's 3 different types, like I said. There's operating activities. So that's going to be your day-to-day business. You have to pay people. You have to get equipment to fix your machines. You have to get lawnmowers. You have to do whatever it is, whatever kind of business you do. Maybe you sell stocks. You have to pay rent for your lease. Okay, those are operating activities. Investing activities are going to be buying and selling long-term assets. So these are going to be things that are going to be making you money. So your investing activities are, you could think of a building as a whole. So if a McDonald's goes and starts a new location, they're going to invest in that building, in that land. That's going to be an investing activity for the business. That's going to be getting new ice cream machines. It's not going to be getting burgers, fries, and patties. Those would be operating activities to keep the business running. But those initial startup costs can fall under the investing activities, or major upgrades could count as investing activities to your business. And finally, financing activities. These are more for companies with a lot of stockholders, and maybe a lot of debt. So financing activities are going to be things like borrowing, taking out loans, paying dividends, issuing stock to new equity members, people sell stock, buy stock. Those are going to be financing activities for the business. So that is how the company is managing its cash on the day-to-day, those 3 activities. Retained earnings. shows changes in the company's retained earnings over time. We're not going to talk about that one, but retained earnings are just what employees and what the owners are taking home on the year to year. Okay, so why I'm talking about this is because I believe that the stock market is going to have a massive day tomorrow because of what came out over the weekend that the Trump administration and China supposedly came to a deal. We'll see what that deal is exactly, but what it means and why stocks are going to fly tomorrow is because the threat of tariffs, well, the tariffs were not a threat, they actually came into place, but what that does is that puts an immediate, and for China's sake, it was the largest tariffs ever seen. It was like hundreds of percent. So anytime a company made something in China and sold it to the United States, which hasn't been happening ever since the tariffs came on, they were paying 100% more for it. So if you bought something for $5, you're automatically paying $10 for it with the tariffs. So right then and there, it makes American companies who buy those products, it makes them more money when the tariffs drop. So if we see a China and U.S. trade deal happen, you're going to see tariffs drop, which means the Chinese economy will be able to sell into the United States. But the point of the tariff is that the roles are reversed so that the United States could sell into China with zero tariffs, because that is what China has been doing to the United States. So if they get that up, you'll see American companies that have a large customer base in China and India, where they're trying to get these trade deals done, you're going to see the demand for these products go way up. And what that's going to do is that is going to go up on the balance sheet. You're going to see more sales, more revenue, and it's going to make the companies worth more money. So that's why you're going to see a large injection of money coming into the stock market soon, because if global trade is realigned and companies are able to trade freely without tariffs, you're going to see every company probably sell more, but also they're going to be worth more because the things that they're buying are going to be cheaper. So even iPhones get tariffed, but if you start making them in other places and now you don't have to pay tariffs, iPhones are going to be getting sold for the same price, but Apple will be making more money, which will make their financial statements look better. So that is why I think with a widespread over so many companies that tariffs affect, you're going to see trade deals happen, the stock market's about to fly. And that all is because of the balance sheet and the income statement like we were just talking about. Okay, so that was a little bit of a rant, all right? But back to why accounting is going to matter to these investors. Financial statements help investors assess a company's health and potential, informed investment decisions versus speculation. So what I just said might have been a little bit of speculation, right? But I believe that is the same speculation that Wall Street and that these bankers are going to take tomorrow when the stock market opens. As they see more and more deals get made, they're going to have less friction in global trade, and that will make these companies inherently worth more value, all right? Because you're going to see them drop tariffs, and that means cheaper goods for the consumer. It's crazy how things are working out. Okay, so like I was talking about before, every public company needs to report their financial statements. So here is an introduction to the 10K. That is the annual report, like I talked about, from January to December, and the 10Q is going to be your quarterly reports. If you're the same schedule, it's going to be January through March, April through May, and then June through August, and then September through December for most quarters. So just some other points here about looking at financial statements, what to actually look for, what some investors look for when they're going to invest in companies, and how they're going to make money off of this, right? Like, what are the key signals that a company is doing well? One is revenue growth. Is the company growing in sales? That's an obvious one. If you see it year over year, the company is going up 1 billion sales, 2 billion sales, 4 billion sales. They're doubling in size every year. That's probably about a good indication that this company has a huge market. They're growing every year. They're doing something right. Their systems are in place, are working well. So that is a great signal to look at to buy a stock. Profitability, just as important as the revenue. Is it making a profit, and is the profit margin healthy? Some of the biggest companies in the world make tons of revenue, but they don't make any profit. one is a tax reason. The more profit you show, the more tax you're going to have to pay. But also, they reinvest it into the company. They do research and demand, or they can invest the money into their company without having to pay those taxes and basically breaking even on the balance sheet. I think it's great for a company to be profitable and because that's just more cash back into the business. But at the same time, if you're smart about it from an accounting standpoint, a tax standpoint, you don't want to show too much profit, because then it's like, okay, you have all this money here that you're not utilizing every year. You want to pay people with that. Take time away from you. You want to enhance different areas of the business. Take that money that you're making and invest it in different areas to make the company better and better and better. So I do think it's profitable, but the important part is the profit margin healthy. If you're making, negative, if you're in the negative, obviously not healthy. But if you're too high in the positive, it's not healthy either, because you're misusing funds. Debt levels, obviously a company that is 90% debt, 10% asset, means you have a lot of liabilities, and you do not want that. And the cash flow is generating enough cash flow to sustain a growth in its operations. So if it's cash flow negative, that obviously means you're going to have to pocket money to keep the business afloat. You want to be cash flow positive before you invest in a company, because, well, not if you're investing in a company, but if you own a company and your cash flow negative, that means the money's coming from somewhere else. So either it's debt or it's the owner's pockets. So you want to be cash flow positive when you're investing in businesses, for the most part. All right, so we have some key financial ratios here that is big in the finance and accounting world. Is your PE ratio, so your price to earnings. So this is going to be all of your earnings for the year divided by the number of shares outstanding. And that gives you a good valuation of how much the company makes versus the price of the asset that everybody could buy. If the earnings go down for a year, that means the price might drop. You could get it cheaper. And these are just, some other different ones that I don't even, current assets, current liabilities, we won't even touch on that. Red flags and financial statements, just quickly we'll look at these. Very high debt levels, we already touched on that. Negative cash flow, already touched on that. Okay, I think we're good. So, this was just some high level points that I wrote down that I just wanted to talk about. We could go back. That was just going through them very quickly. The equation assets equals liabilities plus stockholders' equity, I think, is a great place to start if you are just looking at these 10Ks and 10Qs. So what I could do is, let's pull up. Let's go to Yahoo Finance. Go to Yahoo Finance. Let's see how the futures are looking. So the stock market is already up tomorrow based on what I was kind of already talking about. But let's look at some of the financial statements and get some of the accounting for some of these businesses. Let's do NVIDIA. Let's see. You have to pay for Yahoo Finance now? That's ridiculous. Here we go, financials. So we're going to look at the annual. Yeah, you have to pay for it to download now. That's crazy. Okay, so this is like what I was talking about before, the income statement, balance sheet, and cash flows. They're all here. And these are the overarching ways to look at NVIDIA super quickly. So if you're an investor, you could pop on Yahoo Finance right now and get a good understanding of what's going on in their business. There's better tools out there. If you guys join the Taylor's Code, I have some tools that I use that I specifically give to my students to analyze charts. So if you guys are in the Taylor's Code, message me in there and I'll give it to you guys. I think you guys already do know, some of you guys. But for people that aren't in the Taylor's Code, link is in my description. So if you guys want to join me and my team of what we do in the day-to-day to be able to buy crypto, buy stocks, things like this, we are constantly checking charts and constantly sharing information inside of the community. So if you guys are in there, you guys already know all the tools that we use. So this is a very quick way if you're just on the web to see what's going on in the stock market. So here's NVIDIA. Let's look at their income statement. And the thing about their income statement is all these numbers are going to be in the thousands. So you're going to see 130,497,000. That's 130 million thousand. So 130 billion. Okay, so this is 2025, 2024. So you could see, look at the revenue increase from 2024 to 2025 for NVIDIA. That is just explosive growth from 2023 to 2025. That is why the stock has done as well as it has over the past 5 years. All right, so other things that fall into an income statement. We have your revenue, we have operating income, so things that make the company money in terms of interest income, interest expense. They don't have any special income charges, but pretty much they get everything from operating income. See, a lot of this, it's before their cost of revenue. So this is the cost of the revenue, 32 million, but they're making 130 million. So they're at about a 4-to-1 ratio in terms of the amount of revenue they make for the amount it costs to make the revenue, which is, they're making great profit. Sorry, this is freezing up on me. Let's take a look at their balance sheet. We'll see if it'll be able to show us how much cash and things they have on hand. Okay, so you could see their debt here, only about 10 billion in debt, as opposed to all of the liabilities they have. All the assets. So cash equivalents, receivables, money that is owed to them, and inventory, how much product they probably have on hand from NVIDIA, and then other prepaid assets. Prepaid assets is an area I handled pretty closely. So prepaid assets is a good line to me. Okay, any questions, guys? Any questions in the chat? I know this is some in-depth stuff. We could look at it more, but that was only part one, that slide deck I had. I'm going to go into more depth about some of the basics of accounting. It'll be another part of the series. Yeah, so it's interesting to look at these mega corporations to see they're just moving around billions and billions of dollars every year. It's pretty crazy, and the more you see what they're doing, you have a better understanding about them organizing all this money like I was talking about before. You get a better appreciation for how complex these businesses are, and it really makes you think about your systems and process of how you could be better from a process perspective. And another thing I was going to do, let's actually do it right now. Why not? I was going to close it out. One of my tools that I like to use for, sorry, this is like freezing. We're going to go on QuickBooks. It's one of my favorite accounting tools. I'm sure it'll just probably take me to the landing page here, but it's an accounting software that can pretty much do anything you need for your business. So it took me right to the buy page. This is an Intuit product. So they have, especially the tax, if your business, if it flows to you as an S corp, I would highly recommend you have QuickBooks, because if you use TurboTax, it's all integrated with your business. You kind of have to do it. So with QuickBooks, if I could just go to the home screen, it'll show me. But it's a way to keep track of everything that I kind of talked about if you're a small business. You're able to keep track of your cash flows, you're able to keep track of your cash, you're able to keep track of your invoices, your expenses, everything like that, and it's able to show you in a simple to use software. I do think that you need a team sometimes if you are getting too in depth, and if you're really in deep about running your business. You're probably not going to have time for QuickBooks as it's a little advanced, but as you get bigger and start growing, you definitely could use it because you could hire someone to use it and really keep track of everything in your business. So that'd be my first thing, is to probably hire an accountant for this, because they will be able to actually put the time into it and get to know it and optimize it. And in the long run, that's only going to benefit your business. All right. So it does a lot of different things, and also gives you the ability to work with accountants. So you could sign up today, work with an accountant. They'll work with your Intuit QuickBooks. And yeah, that's all I had for that. Just wanted to show you guys QuickBooks quickly because I think it's a good tool to use. All right. Any other questions? I feel like I might have went through the accounting slides a little quick, but at the same time, I think it was helpful what I was talking about. All right, ladies and gentlemen, that's all I had today. If you guys enjoyed the video, please make sure to like and subscribe. And if so, go check out the description in my bio for this video, the Taylor's Code. Check it out. $50 a month to get into the community. But also, if you guys want to get an audit for your business, I'm doing those for absolutely free. If you join a 15-minute call to Calendly, link will be in my bio as well. So check those out. All right. Any questions? Drop them in the comments below. Peace.